Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. High inflation and interest rates are a double whammy for Americans. The higher cost of living makes it more difficult to pay bills, and higher interest rate make it difficult for people to pay off their mortgages or even step on to the property ladder. One way investors can actually make money off mortgages is through mortgage real estate investment trust, or mREITs for short. John, could you tell us, how do mREITs make money?
Yeah, sure. They borrow money at short-term interest rates, buy securitized mortgages, and collect income from those mortgages. mREITs have taken a hit, actually, in the high interest rate environment, and that's because higher interest rates make it more expensive to borrow and service debt, which can cut into profitability. But with the Federal Reserve poised to cut interest rates as soon as this September, the outlook for mREITs is heating up. Lower interest rates make borrowing cheaper and allow mREITs to refinance debt at better rates.
And how do investors make money with mREITs?
mREITs, like the broader equity REITs, legally have to distribute 90% of their taxable income to investors in the form of a dividend. And those dividends can be quite high.
Let's bring in today's income pick, Franklin BSP Realty Trust, Inc. They're traded on NASDAQ under symbol FBRT. They have a current dividend yield of 10.6%. That's more than 3 times the current inflation rate of 2.9%. So, John, can you elaborate a little bit about what Franklin BSP Realty does?
Yeah, absolutely. It is, as you can imagine, an mREIT that originates, acquires, and manages a portfolio of commercial real estate debt, primarily first mortgage loans. It also invests in subordinate loans, mezzanine loans, and securities. Yeah, its portfolio is secured by real estate located here in the U.S. and diversified by property type and geographic location. Now, the company's current $5.4 billion portfolio is made up of 153 commercial real estate loans. The majority, at 74% of its portfolio, is made up of multifamily. Now it's followed by hospitality at 14%, and office and industrial, which are both at 5%.
And John, I was reading on incomeinvestors.com that it announced a loan commitments for the first half of 2024 of $1.2 billion.
Yeah, for the second quarter, ended June 30th, Franklin Realty reported a net loss of $3.8 million, or a loss of 11 cents per share. That's down from first quarter 2024 net income of $35.8 million, or 35 cents per share. Now, distributable earnings came in at $32.4 million, or 31 cents per share. And at the end of the second quarter, the core portfolio principal balance was $5.4 billion, and that's up $195 million from the first quarter. Now, during the quarter, it closed $622 million of new loan commitments, bringing total loan commitments for the first half of 2024 to $1.2 billion. Now, it ended the quarter with total liquidity of $699 million, which includes $95 million in cash and cash equivalents.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, finally, what can you tell us about the dividends here?
Well, Franklin Realty has only been trading since 2021. Now, it was a result of a merger between Franklin, which in itself was formerly known as Benefit Street Partners Realty Trust, and the merger of Capstead Mortgage Corporation. As a result, the newly merged company doesn't have a long history of paying a dividend. That said, it's paid a reliable dividend since 2021. This past June, it declared a quarterly dividend of 35.5 cents per share, or $1.42 per share on an annual basis. And that works out to a pretty big yield of 10.66%. Now, in addition to a reliable ultra-high yield dividend, Franklin also returns value to shareholders through the less loved share buybacks. Now, in the second quarter, Franklin repurchased almost 241,000 shares at an average price of $12.42 per share for an aggregate of $3 million. That still leaves $31.1 million remaining under the current $65 million share repurchase plan.
John, thank you so much for your insights. Just to recap, Franklin BSP Realty is an mREIT with a diversified portfolio of commercial real estate debt, primarily first mortgages loaned in multifamily sector. In fact, over 99% of the aggregate principal balance of the company's portfolio is in senior mortgage loans, with about 97% in floating rate loans, and roughly 74% of the portfolio is collateralized by multifamily properties. Franklin has a strong balance sheet with total liquidity of $699 million, and during the first half of the year, it originated over $1.3 billion in total commitments. Thanks to its strong cash generation, this REIT is able to provide investors with both reliable high-yield dividend and share buybacks. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.